Hello everyone, George DeSantis here with a look at the market for the week ending August 31st, 2018. And as usual, before we continue, take a look at the disclaimer. It clearly states that I'm not an investment advisor, and if you need investment advice, you should contact one. We'll begin by looking at the weekly chart of the S&P 500. So here's a weekly chart of the S&P 500. As we can see here, the three moving averages are above each other. The shorter ones are on the top, the 4 exponential moving average, the 9 exponential moving average, and the 30 weighted moving average. And this magenta line here is a 50-day or 50-week, in this case, moving average. Now, just doing a little review, we remember now going back to February, we started this triangle ABCD, and we calculated from this triangle a target of 3,094. And as I've mentioned a few times before, there are many folks who are predicting that we get to 3,000 by the end of the year. Well, let's hope they're right. Right now we're at 2,900. Remember the days when we were talking about 2,800 being resistance. So what we have here is an uptrend that started way back here. This weekly uptrend started again in May, in the middle of May, when these averages crossed over each other. Now, we are approaching the upper Bollinger Band, which is 2 standard deviations on the weekly chart. So it's quite possible we see a little pullback. It's always a possibility you see a small pullback. But right now, if we look at some of the other indicators like MACD, you'll see that MACD is trending up it trended up from below the zero line here, and then it became bullish, and it continues to trend up. Now, our RSI 12 on a weekly chart is very informative. As long as it crosses above the 40% line, we start a new uptrend, and this is what we have here. We have this magenta line here plotting the RSI 12. The default setting is 14, but I use 12. It's based on some research that we looked at earlier, some time ago. Williams percentile likewise is above the 50% line, which I like to call sort of a line in the sand. As long as we're above 50% and we crossed it here at the same time that these moving averages crossed, then we have confirmation of the uptrend. And at the bottom of the chart, we have this sum of the rate of change indicator, which is above 4%. So it continues to indicate that we do have a nice uptrend. So that's the story. We have an uptrend on the weekly chart. Let's look at the daily chart. Okay, on the daily chart of the S&P 500, you can see how we approached and actually breached the upper Bollinger Band, which is 2 standard deviations. So there are 3 bars that actually closed above the upper Bollinger Band. When that happens, the probability of prices continuing to go higher is diminished by that time. So what we see here, as we typically see when we hit the upper Bollinger Band, is that we get a little bit of a pullback. So on Thursday and Friday, we had a little pullback. We ended up with a doji here, which is this small-bodied candle. But now we are between this 4 and 9 EMA, and we can anticipate the market to go higher. The fact that MACD trended down a bit here is insignificant. And in fact, we were looking at the possibility of a divergence of MACD, but we started here, and it doesn't seem as though that's going to play out. It seems as though MACD got a very nice move here, and so I'm not too concerned about that right now. The other indicators are all in bullish territory. In the interest of time, I'm not going to worry to discuss those. So both the weekly and the daily charts on the S&P look very bullish. Here's a quick look at the regression channel on the S&P using Best Choice software. And we can see we're bumping up against that 90% line, which is really an overbought region. So you see when we hit that, let's get this crosshair out of the way. When we hit that, we pull back a little bit on Thursday and Friday. But it seems as though we have a nice uptrend, as I mentioned before. Seasonally, if we look at the seasonal chart, we can see that we usually get a bit of an uptrend from September here. We get a nice move seasonally toward the end of the year with some fluctuations or volatility. But I'm expecting that we might hit that 3,000 at the end of the year on the S&P. Now here's a new high, new low index, and you can see that it broke above the 50 and the 200-day averages here, and it's really all the way up here to 1,081. Anything over 500 is usually pretty good, pretty bullish. So we're in pretty good territory here. On the impulse chart, the weekly chart of the S&P, you can see that we are making new highs, and we are on green bars, so we are not allowed to go short, which means the inverse of that, we should be owning stocks. But it's really a censoring system. If you read Alex's work, Alex Elder's book, you will see what he says. It doesn't tell you what to do, it tells you what you shouldn't do. So you shouldn't be shorting this market. Okay, and here is the chart that shows us the percentage of stocks of the S&P 100 above their 200-day moving average. You remember we were all the way down here in the 50s. Now we're at 68, and we seem to be really getting into a nice move here. We can go all the way up here, but we'll see where we go from here. But I'm anticipating a further up move from here. You can see that its MACD is bullish. So that's what I'm expecting. And here's a chart I haven't looked at in a long time. And I learned this from someone who has passed away, but his name is Terry Laundrie. And years ago, I used to subscribe to his newsletter. In any case, you could see that this is a chart of the ratio of the faggots to the U-sticks. Now, it's really the Fidelity Capital and Income Fund versus the Vanguard Long-Term Treasury Fund. So it's stocks versus bonds, and you can see that as long as it crossed here in 2016 above the 50-day moving average, and it remained pretty much above it, that was an indication that that new uptrend began. So that's an interesting chart to keep an eye on. So let's look at some individual stocks. As you know, I own quite a bit of Apple. I've owned it off and on over the years, but at this time I do have some Apple, quite a few shares. I'm very happy that I do. But Apple has been screaming, been running higher. We all know that Warren Buffett's been buying because he thinks it's still very cheap. Look at this chart here. You'll see the volume has been more than average. You see the volume spikes here above the average volume. So Apple has been doing quite well. We can see MACD has been trending up like hell, and RSI 12 and all the other indicators doing well. We don't know how high is high with Apple though. It's overbought on a lot of indications, but I'm not going to sell it here. Another one I own, of course, is Microsoft, and it's done very, very well. We had a target of 103 on the basis of this triangle, and now it's at 112. But it has a very nice candle last week. These are weekly charts I'm looking at, and MACD looks real strong. We had a nice uptick in MACD, and these other indicators are all in bullish territory. So like Microsoft, we continue to hold it. And another one on that list that I sent you in April, that shopping list as I call it, is Align Technology. And you can see that once it broke out of this triangle here, it continued to go up, hit the upper Bollinger Band, and then consolidated for a while, but it seems like it's making another move again. So the other indicators are looking really strong. That's Align. Here's MasterCard, weekly chart. You can see very similar looking chart. Uptrend, 4 above 9, 9 above 30, 50-day moving average. Approaching the upper Bollinger Band, so possibility of a little bit of a correction or consolidation. We did have a divergence, somewhat of a divergence, not very strong one, but a divergence anyhow, of MACD, and it played out a little here in this pullback. But now it seems to be on the upswing again. MACD is trending up from below the zero line. So love MasterCard. I don't own it right now. Here's another one that I own, IDEX Laboratories, and it's done very, very well. We had a triangle here on the weekly chart, and it seemed to be breaking above the triangle. So I'm holding this one. All these other indicators are looking pretty good. MACD in bullish territory. Wow, here's NVIDIA. All weekly charts, of course, as I said. NVIDIA had a nice run up, as we all know, last year and this year too. And then it went to sleep for a while. And boy, did it have a nice big bullish engulfing candle here 2 weeks ago. And then last week, it moved even higher. So NVIDIA is back in business. It's doing well again, making new highs. I don't own it at this time. Can't own everything, like a kid in a candy store. Here's XLK. Of course, that's one of the technology sector ETFs. And you can see it's making new highs. Of course, we would expect that because technology is, NASDAQ is. And I don't own it at this time, but I did own it for quite a while last year and made some good money with it. But it's a really good ETF to hold, and I do like it, but don't own it. Here's Netflix. Now, I have owned Netflix in the past, but I don't own it here at this time. Netflix hit the upper Bollinger Band. I believe earnings were somewhat disappointing in some ways, or the projections, the anticipations for the future. And so it's pulled back, but now notice we have a nice big bullish engulfing candle here 2 weeks ago, and now we have a doji here. So Netflix looks like it's ready to make another move again. And you see MACD trending up from below the zero line. That's pretty good. That's pretty bullish. And all these other indicators here are. And here's Visa, one of my best friends. Owned quite a bit of it and held it for a while. Notice it's making new highs again. Love the payment systems. Visa, MasterCard, GDOT, GDOT, PayPal. All of these are very good payment systems. Even Square. And I did buy some Square, not a hell of a lot, but I did buy some Square, SQ. But look at Visa, making new highs again. MACD in bullish territory. Everything looks good. Still holding. There's another stock on the shopping list I sent you in April. Here's Costco. Costco is having a nice run. I noticed a bearish divergence here, but it doesn't seem to be responding to that. This was a bearish divergence of MACD if you took this high and connected them. So we'll see. I don't think it's looking as though it's going to materialize. It might just keep trucking along and going higher. I don't own it at this time, but I do like the stock. So I've been doing some trading in my cash account, which I don't usually do any trading in. I just spend the money. But recently I bought Marathon Oil and MPC, I think it was. And I made a nice buck on it. And I made a nice $1,000 or whatever. And I sold it. And I bought CRISPR. Why? I thought it made a bottom here, and there was a very interesting article somewhere, I believe it was in MIT Review, and it's up nicely here. So I'm up a nice, I don't know, maybe $4,000 or so. Real nice little walking around money. And you see MACD is trending up. Somebody is buying up this stock. There's some money coming in here. It's my guess anyway. I'll be trading it. Probably won't hold it for very long. Here's one that I still own, Adobe, and you can see it's a nice uptrend. And we have MACD trending up again from below zero, the zero line. So I like this one and I still have it. And here's Etsy. Etsy continues to do well. My friend doubled her money in it. That's a nice deal. So it's continuing to do very well. They're coming with good earnings, So, but I don't own it right now. I did trade it some time ago. And here's the ETF on the IBD 50. You can see it's making new highs. So for someone who is not really interested in watching the market very carefully and you want to buy IBD's 50 growth stocks, an ETF, it's something you can do. It's looking pretty good again. I think that's all we have time for. So we'll say goodbye, have a nice weekend, and a nice holiday tomorrow.